Hello everyone, and welcome to the latest update of our global outlook here at the EIU. My name is John Ferguson, Director of Global Forecasting and Country Analysis, and today I'm joined by Fiona Mackey, Regional Director for Latin America, and Kaylin Birch, our Global Economist. Today we plan to cover a few topics for you: Brazil, the troubles in Argentina, North American trade, as well as the US midterms. Fiona, maybe we can start in Latin America with Brazilian elections, something we've been talking to our clients about for a long time. Before we get to our views on the second round, which is coming up on Sunday as we record this, can you please just give us a bit of an update on what happened in the first round?
Yeah, I think essentially what's happened in Brazil and in the first round election was something of a political earthquake. So we've seen deep disillusionment among voters about the corruption scandals that have taken place in Brazil over the course of recent years. And what that's resulted in is political polarization and the decline of the center, the pragmatic center in Brazil. We've seen polarization, and what we saw was the far-right candidate, Jair Bolsonaro, won the first round by a large margin. He will be joined in the second round by Fernando Haddad of the left-wing PT, the Workers' Party, and what we see is a lot of polarization between those two candidates and a race that's been really fraught and problematic.
That's fascinating to hear, because that's something we talk to our clients a lot about, what's happening in Europe, that political fragmentation, the sort of collapse or decline of the centre, and both the far left and the far right sort of becoming more prominent in politics. That's obviously happening here in Brazil. So what do we expect to happen in the second round?
I think, just to answer your point, it's really interesting, and one point that I would make is actually it's the result of different factors. So really, in Brazil's case, it's coming from corruption and weak institutions, but we're seeing in Brazil, as in the rest of Latin America, the same result, this polarization and the rise of political outsiders, and that's what we've seen in Brazil. And Bolsonaro, looking towards the second race into who's going to be president, I mean, it would take something extraordinary for Bolsonaro not to win at this point. Right. So just looking ahead to policy, I think the main question is, what is Bolsonaro, this outsider? We're not sure what he really represents, so what is he going to do? And I think the main point is that there's a lot of uncertainty, and that's bad for investors. And we can't really say with a lot of certainty what Bolsonaro is going to do. But I think we need to look at politics, and we also need to look at Congress. And okay. I think in Brazil, Congress is really important. It's also really divided. But it looks as if Bolsonaro will at least have a simple majority in Congress, and that will be really important, at least initially, at getting legislation through. And I think the number one priority is going to be pensions reform, because everyone's looking at Brazil, the fiscal accounts, the rising public debt.
And that's necessary because of the difficult fiscal position.
Absolutely, yeah. So the public debt has risen towards 80% of GDP. It's a level at which ultimately investors and markets, they're going to withdraw their support for Brazil. And Brazil is ultimately, if it doesn't address the public finances, then it's going to find itself back in recession and back in some sort of fiscal and public debt crisis. So that's priority number one. And we think ultimately, because Bolsonaro would have a majority, he would be able to get important reforms passed, like pensions reform. The big question is around other issues related to the Custo Brazil, the high cost of doing business in Brazil, related to unwieldy tax systems, labor markets. So it's what he does there, and whether or not he makes any improvements there.
Now, there is some uncertainty, but markets seem to be taking this quite well in terms of potential Bolsonaro victory. Is that because markets believe that some of these issues that you're talking about will be resolved in a positive way?
I think markets do believe that there will be positive steps undertaken by the Bolsonaro government. I think maybe we have to be a little bit more circumspect about what will happen. And I think there have been some signals from Bolsonaro. He has a free marketeer as his economic advisor who's very well respected, but there's a question about how much freedom this advisor would actually have in terms of policy making. And there have been some hints from Bolsonaro that he really is an old-fashioned populist. There was a truck driver strike in Brazil in May, and Bolsonaro came out in support of those truck drivers, and the government had to backtrack in terms of subsidies. He's also been really reluctant to support his advisor Guedes when he said that there might need to be tax increases. So there are some hints that what we're seeing really in Bolsonaro, despite what he's saying and what his economic advisor is saying, of an old-fashioned populist. So we think that there are those risks. I think also there's a risk around the fact that Bolsonaro seems to want to follow Trump's playbook. And the fact is that the economic situation in Brazil and institutions in Brazil are currently very different than in the U.S. But in the one area, I think, where we can be positive is around red tape and regulatory reforms. Okay. And if progress is made in those areas, then we could see a growth boost in Brazil.
Okay, so lots to watch, and we'll be watching very closely on Sunday. Now, what happens in Brazil matters for Argentina. We've been talking here in this environment about the potential for an emerging market crisis across the world. We look at Turkey and Argentina. So Argentina is a really fundamental and important country for the global economy. Is it getting better? Is the situation
It's getting better,
or
but
worse?
Brazil is not helping. You know, Argentina is facing headwinds and it has a mountain to climb, but it is making progress. And I think if you look at Argentina's vulnerability and why the peso depreciated by so much in the year to date, I think you can look at just the data, the point-in-time indicators, which show that Argentina is currently running a really big fiscal deficit and also a really big current account deficit. Now, the currency adjustment that's happened so far will take care of the external side, right? So the current account deficit will shrink, and ultimately we think it will turn into surplus in the next couple of years. And at the same time,
which will take a lot of pressure off.
It will take a lot of pressure off, but the government also needs to deal with the original sin in Argentina, which is fiscal policy, which led to high inflation, which actually led to the overvalued peso. So it really needs to tackle the fiscal accounts, and it's doing that. And the data just came out recently that showed that in the first 9 months of this year, the government is well ahead of its target in terms of reducing the primary fiscal deficit. So that's on track. I think for Argentina, the risk at this point is political, because there's going to be a lot more bad data, and the inflation's going to be high for a while, the GDP outturn is going to be really bad for a while, and we've got a presidential election in October 2019, and the question is whether or not that adjustment and that recovery, because we're in a deep recession in Argentina at the moment, can happen in time for October and therefore allow the current president, Macri, to be reelected and allow sort of Argentina's normalization process to continue. So that's really vital for us to see, and for us the risk is all political.
Okay, all right, so some cross-cutting themes there in Latin America. Let's go north a little bit and talk about North American trade, and we'll bring Mexico in a minute. Callum, can you tell us about NAFTA 2.0? So one of the risks that we were talking about with global trade, the potential collapse of NAFTA, we expected this to happen, and it turned out the way we thought, but can you give us a little bit of an update on NAFTA 2.0?
Yeah, and really NAFTA 2.0 is the best way to describe it. I think the new US, Mexico, Canada agreement really kind of maintains the same spirit of the first agreement. This is largely what we were expecting, because really the US still has kind of a very strong trading relationship with both Canada and Mexico, and will not want to disrupt that because it will have a significant economic impact at home as we're facing November midterm elections, and in really a very short time, presidential elections in 2020, understanding of course the campaign actually starts a year before that, so they're basically around the corner. The U.S. is pushing for a few new elements, most notably kind of a lighter dispute resolution mechanism that will allow the U.S. a bit more leeway to have its way in trade disputes, particularly with Canada over lumber. But actually that was maintained, so the existing dispute resolution mechanisms that allow for Canadian firms to represent themselves and have impartial panels, that's still in place. That was a big win for Canada out of the negotiation. And we saw excuse me, an expansion of digital trade protections and IP protections. And this should probably benefit the U.S., which is the major exporter of digital services. That includes music and entertainment streaming and any number of online services, of which, the U.S. really is the market leader in North America. So this actually kind of updates the agreement. So we have dispute resolution maintained. We have updated kind of components that allow this agreement to kind of exist in a more modern era. Remember, of course, the original was from 1994, and the digital world was very different in 1994 than it is today. But what I would say is probably the most significant change under this agreement, and we have yet to see how it's really going to play out, are the new regulations surrounding the automotive industry. So they increased under the USMCA the rules of origin requirement, which means that we had previously had about 62.5% of components going into domestically, so within North America, manufactured cars. The components had to come from within North America, not imported from China or elsewhere. And we're now looking at a rule of origin component of over 75%.
It's a pretty significant change.
It is significant, and that will require some shifts in supply chains, and that will change kind of import-export patterns. It was, in some extent, kind of meant to limit China's rise in terms of supplying components to the auto industry, and to make sure that really the U.S., but also the U.S. and Canada were doing what they could to support domestic manufacturing in the northern side of North America. The second important thing for the auto industry is that we have a higher percentage of components that must be manufactured by workers who are making over kind of a $16 per hour minimum wage. So this is also meant to ensure that more goods are produced in the US and Canada, more of these components, and less so in Mexico, where we have seen more stagnant wage growth, and this is meant to kind of raise that bar. So all of that will imply some shifting around of supply chains within North America, and then between North America and the rest of the world. And we, for the moment, are expecting that to actually raise production costs within the region, both because we'll have to have more expensive components coming from within North America, and more of those will have to be produced in areas with higher wages.
Absolutely.
So we'll have to see how this really impacts automotive and manufacturers. For the moment, it looks like they won't be getting the double kind of effect of the potential threat of automotive import tariffs that the US is continuing to level against the EU and potentially against other import partners. That, for the moment, looks to be on hold. That would be a major concern if it were to happen at the same time of these new regulations. But for the moment, it looks like automotive manufacturers will be dealing with higher costs, but not a total restructure of the way they do business. And on the whole, NAFTA 2.0 will maintain a lot of business as we know it.
Okay. Fiona, how does that look from Mexico's perspective?
I think from Mexico's perspective, the most important aspect of NAFTA 2.0 is that it's happened and that we have a reduction of uncertainty with the new president coming on board in December, because there's a lot of uncertainty around policy. As in Brazil, there's a lot of uncertainty around the new president in Mexico and what he's going to do. Again, as in Brazil, you know, we're seeing an outsider. We've seen this disillusionment in Mexico. So we've got this president, and we're not sure whether AMLO is going to be a pragmatist or a populist. And I think the fact that we have NAFTA supporting the economy and that we don't have any uncertainty surrounding NAFTA, that's really important. The other thing I think is really important about the deal is that AMLO supported it. So that's our first clue, our first signal that he's going to be a pragmatist. And I think that's really important that he was supportive of that deal and of those negotiations that have taken place under the Peña Nieto government. So I think that's important for Mexico.
Okay, great. So that's reduced one element of risk hanging over the US economy. But you also mentioned the midterms. Mm-hmm. How are they looking?
So we're only a couple of weeks away now from this really important contest. And there are a number of issues that are coming up in the campaign, but for the most part, we've seen a little bit of talk about tariffs and the impact that that will have on American businesses. But we're really seeing kind of a resurgence of domestic issues. So healthcare has been particularly important. Immigration is still very much on the top of the agenda. And this are, really these are the same polarizing issues that we've seen pushing Democrats and Republicans apart in recent years, really.
And Democrats have had a hard choice to make, from what I see, that they a lot of them are campaigning on healthcare, whereas other people are talking about maybe they should be focusing on the values, the democratic values. But as you say, healthcare seems to be a big issue from the Democratic side of the fence. Yeah, and I think this midterm campaign will also be very telling for the presidential election in 2020, because as we've been signaling, really for more than a year, the Democratic Party, which has been essentially in opposition in Congress, if you will, for the last 2 years, is still trying to find its footing and figuring out how to connect with American voters, whether that be in the Rust Belts focusing on manufacturing and agricultural centers that have a lot of kind of key concerns about household income levels and public services and things like that, or to focus on the Sun Belt, if you will, the slightly more liberal states, take California, for example, that might embrace a more kind of left-leaning, kind of further on the outside of the spectrum type of candidate. And I think they're still probably trying to find their way within that, and we'll see from how this election pans out where they really get a response. So we'll learn a lot of lessons from the midterms, and Democrats will learn a lot of lessons of what really matters to voters and how they should be positioning themselves going into 2020, which will be a huge election. Right. And remembering, of course, these are the midterm elections. So this is for Republican and Democrat senators and congressmen. So we will be dealing more with local state-heavy issues in 2020.
we always shift a little bit more to an identity politics contest for the entire US and more kind of value-based, because this is the way that presidential candidates connect with the entire population rather than just a particular constituency in Missouri or all of Texas, for example. So there's always going to be a bit of a shift there. But at the moment, the Democrats are finding their way and figuring out what issues are really the ones to connect on. Republicans are still very much embracing President Trump and his policies. We're seeing a lot of kind of very loyalist candidates, if you will, emerging amongst the Republican kind of orthodoxy. So at the moment, we have kind of a little bit more constancy on the Republican side and Democrats trying a few different strategies.
Absolutely. But we're still holding to our call, our forecast, that the Democrats will take back the House? At
the moment, it seems Democrats do have a stronger chance of taking back the lower chamber, the House of Representatives. Typically, under kind of Republican or Democratic administrations who have control of Congress at the midterms, this is true of kind of American history of the last 100 years, typically the party that's currently in power in the White House tends to lose between 20 and 30 seats in midterm elections for Congress. The Democrats only have to win 23 to take back the House. So that seems, in the current very polarized atmosphere, where President Trump is popular with the core Republican voter base, but not with centrist and Democratic voters, to be a relatively easy win for Democrats in the House. There had been some more talk about a month ago of Democrats having a stronger chance of taking over control of the Senate. However, they really are facing the uphill battle there. 26 of the seats that are up for re-election are held currently by Democrats, only 9 by Republicans. There are about the same number of each that are considered toss-ups, about 5 on the Democratic side, 4 on the Republican side. It would take a major landslide for Democrats to come into power there, and actually it seems that the very controversial nomination process for Brett Kavanaugh, the newest Supreme Court justice, has actually really kind of riled up a lot of Republican voters, and a larger percentage of them, by about 10 percentage points, both female and male Republican voters are now saying that the midterms are, quote, very important. So we've seen more voter awareness amongst the Republican base that mean probably Democrats' chance of the Senate is getting slimmer.
Okay, excellent. Kaylin, Fiona, thank you so much. For all of you watching, please head to eou.com for more information. If you're not a client or a subscriber, there is some free analysis. But if you are, whether it's country reports or country forecasts, country data, you can get much more insight from our great analysts at eou.com. But thank you again for listening. We'll be back next month with another update of our global outlook.